Good morning, guys. I hope everyone has had a fantastic trading week. My name is Samson Mzera, and welcome to today's session of Market Snapshot. We will be going through the major events for the week, and then we will try and see what opportunities are there on the markets, and then after that, what to expect or anticipate the following week. So I'll quickly start off with the calendar, then do a summary of the news, and then from there we see key highlights. Okay, so number one, this week we had quite a lot of activity coming out. We had the Australian, I think the highlight was Australian CPI. This really pushed the Australian dollar. What else? We had the Canadian Bank of Canada meeting, and then we had the ECB meeting. Now, the theme from all of these meetings is one. Seems as though central banks around the world are currently attempting to pause. Let me zoom in here. Central banks around the world are currently attempting to pause their interest rate hiking cycle. And even though they're trying not to put it that way, it seems very clear because we had Bank of Canada coming and saying we might hike, but we've paused. And the market didn't believe that. And we saw slightly weaker card. Same thing with Euro. Yesterday we had a meeting. They tried to sound like they might still raise, but the fact of the matter is a lot of these economies apart from the US are not looking very great. And that means we might see them failing to raise interest rates further. So the fact that they might fail to raise interest rates further then simply states that we might continue seeing weaknesses in these currencies. So last week, I remember we talked about the dollar and we said they are starting this tone of we might not raise interest rates and yields might do the job. That was very okay. However, it's very hard to sort of sell the US dollar when these other currencies are also showing a lot of weakness. And that's why it's very important to be careful. Yes, the dollar might show some signs of weakness, but these other countries also, the economies are not looking so great. So we might not see a lot of aggressive turning points on the dollar. So if you look at the dollar index, which is a basket comparing all the currencies against the dollar, let me see. XY. If you look at the dollar index on the daily chart, also if you can just say hi from the chat section if you have any questions and so on. So if you look at the dollar index at the moment, we seem to have sort of topped out. So this is the yearly chart all the way from January, which is here. So we dipped a bit, but this uptrend seems to have topped out, and now we're in a ranging market, meaning the strength of the dollar is sort of tapered a little bit, and now we might seem to be ranging or we go slightly higher, but there's a very low likelihood of us reversing, and that means of us seeing weakness in the dollar. We might most likely see it ranging, and that's what a lot of guys will be anticipating over the coming week. So that's basically what we've gotten from today's or this week's announcements. Yeah. Yes, the dollar might be weak, but these other currencies are weaker. So it's very hard to deduce how to go about shorting these other shorting the dollar, because what are you going to short it with? So that's the play for the week. So if we just use there's an article that's putting it well here before we continue. So here it's saying the main talk was stark growth gap makes the dollar even harder to sell. So yes, guys might be looking to sell, but the difference between the US economy and these other economies is so big that it's making it a harder case that you must or you should sell the dollar. It's overbought. Yeah. So here it's saying the dollar reaction was quite muted. We don't think this was due to the impact of the ECB, but rather PCE figures and jobless claims climbing back up. This might be one reason, but the other reason is, yes, technically, we have seen an uptrend in the dollar for months now, and positive reactions are not being received with so much excitement anymore. So that's what is currently happening. There's also a building trend for the dollar to find less upward momentum after some strong releases. So you're starting to see that whenever we have positive news releases for the dollar, the reaction is not that huge. That is consistent with overbought condition of the greenback. Why? Because the dollar is currently overbought. And the notion that we might be close to the peak of US activity, data optimism. Yes, the US economy has been very strong, but analysts are saying we might start now seeing weaknesses in the economy, cracks in the economy, if you may say so, finally. In the sense you could see data outside of the US having a greater impact on the global market dynamics. There's that. So today we have personal income and PCE figures, these ones. So we have PCE figures at around 330, which is over here. Core PCE index month on month. Expectation is 0.3. Previous was 0.1. Now, the thing about what we've just said a minute ago is if personal income and PCE figures for September fail to steer the markets drastically today, we feel that the dollar may stay broadly supported the weekend. So number one, if we have positive news and it doesn't cause a lot of reaction in the market, then there's a reason to believe that the current strength in the dollar is about, it's gone too far, if I may put it that way. But I'm expecting that we will have a huger reaction or a bigger reaction if we have a number that's less than 0.3 than the reaction we'll have gotten if we have an outcome that's more than 0.3. So negative news might have a bigger impact on the market than positive news, considering where the dollar is at, based on what we've just read. Yeah. Okay. Now, before we go to the charts, I just want us to have a look at the news from the stocks perspective and what has happened this week. So we've had a lot of earnings reports. Let me just check that for you. We've had a lot of earnings this week. I think it's over here. Yeah, so we've had a lot of major company releases this week. Some have really performed well, some not quite. Let's see. This was on Tuesday. We had Microsoft beating earnings. We had Alphabet, which is Google, Coca-Cola. All this came in better than expected. But if you look at most of these indices and the broad market, let me just bring that chart up. Just a minute. Where is it? Okay. Yeah. So if you look at most of these markets on the daily chart, especially, we see that we've had a downtrend. Yeah. We've had some sort of a downtrend in both US 30, US 500. So this is against the backdrop of what the earnings have been. So the thinking is, yes, we've had good earnings coming out, but whatever is going to happen next, a lot of investors are still concerned. And that is showing on the yields. Before we start doing analysis of these charts, that is showing on the bond yields. So if you go to your chart for bond yields, so why are we looking at the broader perspective? The broader market and the different markets are helping us understand what general direction we should pick when it comes to currencies. So the moment so this is US 10. The moment we have a broader understanding of where macroeconomic trends are heading, then now we can go to the charts and say, we think it's going to be a downward trend or an upward trend and things like that. So in this case, you can see that on the daily chart, we had a rebound on yields. So yields came back down for the better part of the week. And then after that, they sort of started recovering. This was on Wednesday when we started seeing a slight recovery. That means the market is still very skeptical about growth prospects, and that is making things look like this. So how do we connect this to the charts? First one we'll start with is Euro USD. So we had this yesterday, better part of the week. Number one, the euro is in a downtrend, as you can see here. So we are still moving downwards, and we tried to recover. Let me do the hourly. We tried to recover a bit here, and the meeting came in. We had a bit of strength, but it was very muted. So in this case, the higher probability for the general direction of the euro, and let me put that there, this here, is that we are more likely to range. That means we are more likely to move sideways than we are more likely to move in a sideways direction than to have any meaningful uptrend. We are more likely to range in a sideways direction than to have any meaningful uptrend. And if we do break higher, then yeah. So if we do break higher, which is unlikely, but if we do break higher, then this will be a proper zone to target on the 4 hours. So on the 4-hour time frame, this is the zone to target. Market will probably be heading for this zone. The more likely scenario is either we head sideways or we break lower. In the event we break lower, then we'll be forced to come back to these lows over here. So you can see a series of market lows it had printed over there, and then we'll be aiming to take the market to lower to this point. So I'm looking so that we don't have a place that's at 1 over there. Yeah, so that's the broader directive. This range over here is our guide to how the market is going to behave. Most likely, it's more convincing if the market breaks lower that it's going to go down than if the market breaks higher. If I see the market breaking higher, chances are we might just be having a fake out. But if indeed it breaks higher and intends to go here, then we should see a support. Stronger theory for the day is we'll be looking to see if these lower areas over here are within the range for the day. So if we can target these lows for the day, it's very hard, although possible, this is the hourly chart. It's very hard for us to, again, we're saying it's very hard for the market to find any meaningful momentum upwards. But it's still likely because we have news today. At the same time, the more likely scenario is either we range sideways or continue going lower. Why? Because we've just read that despite the fact that the dollar is in an overbought region, people are buying the dollar. Most investors are afraid of selling the dollar because you can't buy any other currency. Because most other currencies are also very weak. So it's very difficult. It's becoming very difficult to have that narrative that, yes, let's start shorting the dollar against X currency and stuff like that. So the most likely thing you can pick from that is we will have a limited upside on Euro USD. Yeah. Yeah. So that's with Euro. If you look at where the key levels are, just a minute. If we look at where the key levels are, I'll just go to Forex Live a bit. Just a minute. So you have the levels for today. I think you can mark this out. So you have so many levels today. So for Euro USD, these are the levels for the day and where we have a lot of orders coming around. So you have 1.5, 1.510, 1.540. This was a key level yesterday. And if you notice that, supposed to put this and this, you can notice that, just a minute. Yeah, at the moment, price is currently above 1.05, 1.0510, and 1.054. This is where the biggest orders are for the day. So these are key levels that you will be looking or watching out for. So let me just zoom in this section here. I hope that's clear. So as a trader, I'd want to also mark those levels on my chart so that it's clear. So let me get back to this chart. Yeah. So the play for the day is, for example, for Euro USD, is we'll be looking to see how strong or how weak the PCE data comes out. If the PCE data comes in favor of the dollar, then we will be looking to see if traders get the market back down here. Remember, on lower time frames, we have an imbalance on euro, and that's giving good prospects for if we break this small point over here. So just a minute, this point over here. That's if we have stronger reading. But remember again, stronger reading, muted effect. But because this is a daily range, then it's highly likely that stronger reading will likely cause some further weakness, but not too much weakness. And then if we have a weaker reading than 0.3, then we might see the euro gaining a bit against the dollar. So that's something you need to watch out for. Although the impact of PCE is not as intense as the CPI reading itself, you will still have to be careful and use your technical analysis to know what to do. Next is GBP USD. Again, same narrative. We've had this downtrend. We've had this downtrend for the better part of the month, but at the moment we are failing to go lower. So it's a very tough time to trade, especially when you're using fundamentals, because it's very difficult to try and deduce what is going to happen next. For most traders, this usually results into a ranging market. So personally, going to next week, I'm just preparing to see a ranging market. We might not have a ranging market because we still have news, but because we already know what to expect from the central banks, the mentality is we will be in a situation where everyone is saying we might not raise interest rates. And that means other dynamics need to come into play to move the markets. So in that case, even with a GBP USD, chances are you might want to see either the market trending a bit low, but very muted movement over the course of next week. So just a minute, let's see. Yeah. So that's Euro USD. Those are the levels, GBP USD. Those are the levels I'm looking at. If you want to know the orders again, just go back to Forex Live and then go to orders. Then from here, you can clearly see, are there any orders for GBP? They're very small orders for GBP USD. So that one we can just leave it. Okay. Next we have gold. And gold is very chaotic. Of course, as long as the situation in the Middle East is going on, we might see gold remain elevated at the current levels. So remember, gold was a true reflection of what was happening on the dollar. And this was what gold was showing. The dollar was, at some point, the dollar was gaining some strength. This was towards the end of last month. And then immediately we had the geopolitical tensions. Gold took over from the dollar and we went up. So we are at a very critical level over here. We're at a very critical level over here. And my anticipation is if the market is very intense, we might see what happened last Friday. So I remember, I think this was the other Friday. Let's see. Yeah, this Friday over here. I remember on this Friday, the market just kept on trending higher and higher and higher until midnight. And if people believe over the weekend there's going to be major news, then this was what happened. Everyone wanted to buy, no one wanted to be caught in a sell. And that's why we had this market pushing higher even until midnight when Friday was closing. So with the tensions, it's very important to watch out for moves like that as we get to the close of today. And if you have any position on gold, also it's very important to manage it going through the weekend, because anything can happen from there. But it's clear that we are at a very critical level for gold. And despite all the negative news, we have still managed to stay within a certain range. So this is something you'll be watching out for going into the weekend. So I'll just put it like that. If the tensions in the Middle East continue, then there's still some upside or sideways momentum. So that's something you need to watch out for. And if you're trading gold, then you can closely follow the news on that. Okay. Yeah. So during the day, I'll be watching if gold breaks yesterday's high, and if it can hold above yesterday's high. If it can do so, then chances are we'll still remain elevated on gold. Okay. The other pair we are watching out for closely was USD Swiss franc. Now remember, for Swiss franc, we have been in a downtrend for the better part of the month. So if I go to the daily chart, the period separators are for the start of each month. So we have generally been in a downtrend for the better part of the month. Now, because you know euro is going to be weak, in Switzerland, I don't think the currency has been affected by the weakness. And this is evidence because whenever there is tensions in the world, it's the Swiss franc that tends to benefit. That means if I see something like this, where the trend looks like it wants to change, I'll be very skeptical, because Swiss franc might regain some strength and it might continue going lower, especially if the tensions in the Middle East. Why? Because everyone stores their money in Swiss banks, and it's the safest and most neutral, one of the most neutral countries out there. So that's why it has been benefiting from all the tensions. You can see it gapped down and things like that. Having said that, for buyers, you need to be very careful when trying to buy Euro CHF. For sellers, you can look for where you can attempt to take trades. We have a region over there. We have a region over here. And we have another region over here. So this is on the hourly chart. I was to mark this. Is this one around that price, and then there is this one at around that price, and then so if you're on your charts, you can just mark this level and see how they behave for the day. So just label them so that you can have a look at them on your own. So these are areas where initially strong selling had started. So the anticipation is it's a good zone to look for sellers to see if they can take the market lower. So those are zones I'll want to be marking on the chart so that I'm just cautious. Even when you're a buyer, then these are regions you need to be watching out for if you have a if you're holding a trade that's in the long position. Okay. Okay. So number $3 index. Oh, sorry, this is US 500, and this will use to represent the other indices. So we've seen generally we are in a downwards trend. So activity is likely going to stay like this for some time. Remember, we've had a bit of positive earnings news from Google and Alphabet, but the market has gone down regardless. So that tells you something. Tells you that most investors are thinking, yes, the economy in the US is resilient, but we are not out of the woods, and we might start seeing weaknesses in the next earnings. So everyone is very cautious with regards to that. So that's why you are seeing that even with positive news, we have this downward trend. So what will I be looking for as a trader? This market is very good for trend followers. That is guys who are following this trend lower. So you can mark your levels. As long as you have the right levels, you can always see how you're going to continue this downwards trend. So I'm just marking key areas like that. Okay. So if you have any other chart that you want us to look at, then you can just type it out on the chat section. In the meantime, the last thing you're going to look at is oil. And also in oil, remember the tensions are driving the price of oil. Today we've had something about Iran, we've had something about the US, we've had something about Syria. This should drive prices of oil because of tension. We are likely going to see more sanctions if whatever is happening continues, and that always has a positive impact on oil. That means oil might rise the more we see tensions. So that's something to be very careful about, especially if you're trading oil. We have these ranges, of course, the 87, around the 87 level, we had marked this initially, and the 90. The good thing with oil is you can always just go for round numbers that end with 0. So here you can mark 89. If you have any other chart you should look at, just comment on the section. That's 89. And then I know 90 is also another level you can look at. This is UK oil. 90, like that. So we have 89, 90, and 92. So we might have more buyers positioning themselves in this market. The question is, how do you position yourself as a buyer? So you already know the sentiment is, in the event of any risk, chances are oil prices will go back up. So it's good to position yourself, especially along these levels. Okay, I think I'll start answering the questions from there. First question is, why is the dollar not moving? So we've discussed this. We've said, number one, if you look at the dollar index, so this is the XY. If you look at the dollar index, we have been in an uptrend from July. At the moment, it's at an overbought area. Where is it overbought? Last week we had, I think it was comments from Fed, and they were like, we think the interest rates are too high, yields are going to do the job for us. So there was some hint towards not raising interest rates further, and that also sort of affected the market. That means we might see the dollar was supposed to weaken from last week. But where has it not weakened? It hasn't weakened because even the other currencies that we're expecting to strengthen against the dollar have very weak fundamental conditions. So that's why what we ended up doing is we're just going sideways now. We're trying to see which one is going to emerge as a stronger currency before we go on. Having said that, we said because we have that sort of mood in the market, any positive news that comes out for the dollar. Yesterday, there was a lot of positive news. GDP was up quarter-on-quarter, so unemployment wasn't that bad. It was still within the expectation. Yes, it raised a bit, but within the expectation. So we had positive news coming out on the market. The dollar wasn't that strong. Why? Because we've already been in an uptrend. So the thing was, even for today, I'll only look at this market if we have a bad reading. If we have a good reading, it might be muted. We might have a spike up or something like that, and then the market's coming back down. But when we have a negative reading, that's when I'll be curious to know what happens on the market. And this is news that's coming in today at 3:30 p.m. So that's one thing to look at. So the fact that negative news might have a larger impact on the market than positive news is something you should be cautious about going into next week. Then we talked about gold. And we said gold is a bit different because right now we're looking at geopolitical risk. So ever since the tension started, we had this gap up and we've just headed higher for the most part of it, for the most part of the month. Now in this case, at the moment, it seems as though gold is at a critical level, which is this major resistance over here. Now we need some really, just a minute. Last week, there was a week on Friday, gold was trending like this. It went up even until midnight, we were still just buying. Yeah. So if the market believes we might see something over the weekend, then we might want to see if the market can break this level over here, and then if it's going to hold on that key level over there. So we'll be looking to see if gold is going to hold above this resistance level. If it does hold, then we might see some slight movement upwards, and this is also dependent on the news today. If there is nothing that comes out of the Middle East today in terms of tensions and everything, then we might want to see also the impact PCE might have on the markets in terms of getting back to these lows. So if you have stronger PCE, yes, it might push gold down, but not quite. So let me just summarize this. There's a high likelihood over here. Just a minute. Let's just put this here. Then, so there's a high likelihood that we might see a sideways range or slight weakness for the better part of next week. There's a high likelihood we either move sideways or we go up. The only time we'd start looking for sales in gold is when we have a significant drop below this level and it maintains or it holds below this level. That is, it fails to go back higher and just holds below these levels. Yeah, so I hope that's okay with gold. USD card, let's see, let's look at USD card. Just a minute. USD card. Okay, so now when we started the webinar, we say that we had some weak news from Bank of Canada and people are not buying the whole story of we might raise interest rates. So in that case, we had USD card. Just a minute. Okay, so we had, okay, let me just pull up the charts and then we come back to this with USD cards. So was it on, yeah, it was on Wednesday. So on Wednesday, they decided to hold, but you see a lot of countries right now, they can't really afford to raise interest rates. The US can afford to raise interest rates because the economy is still good. But most of these countries, they can't afford to do that. Why? Because their economies are very weak. And that's from the data that has been coming out on this calendar. You can clearly see that other than the US, most of these countries are having very weak data. So that's giving the market a very bold reason not to start selling the dollar. So from Wednesday, when they released this and they said we might raise, we might not raise, the market wasn't buying the narrative that they're actually going to raise. Rather, they might actually pause on interest rates. And this is Tuesday, this is Friday, this is Thursday, this is Wednesday. So from Wednesday, we started seeing this uptrend. This is what caused the uptrend, especially on Bank of Canada comments, weakness on the Canadian dollar. So, thing is, us seeing a significant move back down unless maybe the PCE comes in very bad, is highly unlikely. Again, us seeing a move back down on Canadian dollar is very unlikely because number one, the market knows something like Canadian dollar is supposed to be weak. Number two, there's a very high likelihood, again, we either see it range, so we either see it respect these levels for some time, maybe a short while, this and this, yeah, or we see us regaining some strength upwards. The only scenario that might lead to us going down is if, for example, at 430, we indeed have very negative news. That is a very high impact negative news. Again, we've said on the calendar, it's the negative news on the dollar that's going to have a higher impact. But if you see positive news, it might have limited movement. So in the event we have very negative news, then chances are we might see the trend changing and then we slowly chug along back down. That's at 330. Okay. I believe that covers Canada, GBP, USD. I think we already talked about this. We had levels. Yeah. So in this case, yeah. Same thing for GBP, USD. Because we're expecting negative news to have a higher impact, and this is negative news on the dollar, because we're expecting negative news to have a higher impact on the currency than positive news, then it should help us chug along slowly lower. So if we see maybe it's too negative, then traders will be aiming to see if the market can go back to these lows over here. If the news comes in positive, then yes, you might have upside movement, but it should be very limited. All in all, this move over here, all in all, if you look at PCE and the past announcements for PCE, the impact isn't usually that big. You need something that is significantly bigger. So a 0.4 change here might not necessarily cause huge movement in the market, but something like 0.6, 0.7, that's when it's going to cause reaction. So you're going to look at those big differences and not necessarily the small differences between the forecast and the expectation. Kindly share the link, show key levels. So if you want to see Forex levels, just go to Forex Live. So let me just show you here. Just go to Forex Live like that. And then once you search for it on Google, just go to orders. Or if you go to the website, then you can just go to more and then Forex order from here. So once you are there, so these are orders for options markets. They're not orders for spot markets. What you're trading on the platform is a spot price. Option orders are mainly used by institutions and they usually have an expiry date. That's why this will be updated every day, 25th, 26th, 27th, this 27th. There is mega expiry for USD JPY today. 10 a.m. New York cut is 5 o'clock. Remember, there's going to be daylight saving happening next week. So this might change. But for now, 10 a.m. expiry is 5 o'clock. So, by 5 o'clock, these levels should be very important, especially this one. I think we're seeing one here that's very interesting. I've never seen this, an order this big, but especially this one on USD JPY. This is the first time I'm seeing 5 billion on the chart. But yeah, 5.1 billion expiring at 150. So there should be some tension around the 150 level for USD JPY. This is one of the biggest orders I've seen. The largest I've seen is, I think, 2 billion. Anyway, so Forex Live, then Forex orders, and then from there you will see it. So I think we can also, having said that, we can also look at USD JPY at 150. Yeah, so they're saying there's a major order expiring at 150. Yeah. So we might see some tension around this level, around 50 level, which has been holding for the better part of the month. Okay. USD we've analyzed. Okay. Having said that, guys, thanks for attending. This, I think there are weeks when trying to interpret fundamentals are very tough, especially when all the banks seem to be pointing in one direction regards on what to do. Next week we have the BOJ policy. Part of the reason why the Japanese yen has weakened this week is because the market is expecting nothing to change. Maybe slight tweaks in their policy, but nothing major. That's why Japanese yen has been weakening this week. There's another, yeah. And then there's GBP. So UK also has their meetings coming out, but this one is very expected. They'll hold and then say they might raise interest rates. What every other bank has done this week. Then finally, non-farm coming out for next week. And I was trying to view what the expectations are. Just a minute. Yes, non-farm. It's saying previous is 236. Consensus is forecast is 150. Just a minute. So just 1 minute. Let me check with this. So we'll have to. So they're showing different previous announcements. I just have to go through this carefully. But yeah, next week we have non-farm, also very major news, and this one might guide us, might guide us on the direction for next week. So if we see that the expectation has come in higher, then it might give us some. Of course, it will come in lower, but if you see the expectation come in higher, it might give us some strength even before the news is announced. So that's something to watch out for. Other than that, thanks guys for attending. Make sure to use your technical analysis and risk management when you're placing trades. And yeah, have a happy trading day.